Welcome back to another episode of the Beginner Day Trading YouTube channel. I appreciate you guys for being here. Please hit that thumbs up so we can continue to grow the channel. I would appreciate it. So on today's agenda, we are going to be talking about common day trading mistakes to avoid. That's right, common day trading mistakes to avoid. Let's get straight into this video. So I'm sure if you made it this far in on this particular page, you already know what day trading is. It involves buying and selling financial instruments within the same trading day. Now, avoiding common mistakes is crucial for success, especially for beginners. Now, a lot of times when you're a beginner, you're very optimistic, you're ready to go. And I would say psychologically, a lot of people in the beginning approach it as if it's some sort of big casino, and that's not what it is. Okay, so I just wanted to get that out and get have that clear. So let's go ahead and get straight into it. Now, lack of trading plan. Okay, jumping into trades without a clear plan is a recipe for failure. I know that I've done it, especially in the beginning of my, I guess you can say, trading. I don't want to say career, but my path, I would say, or quest, or whatever you want to call it. Now, without a plan, decisions are often based on emotions rather than logic. Okay, develop a detailed trading plan, including entry, exit strategies, and risk management rules. Okay, now I will say this: if you're going into a trade without a plan, you more than likely are going to lose. Now, you can have some beginner's luck, or every now and then, some sort of luck will, potentially pop up for you. But overall, when you factor in the losses versus the wins, going into it without a strategy, you more than likely are going to lose big time. So, this is why it's very imperative that you have a trading plan and you actually execute that plan. Okay. Otherwise, you're going to run into a lot of trouble and you're going to be funding your account more than you thought you ever would. Take it from me. Okay. Now, we talk about developing a detailed plan, including entry and exit strategies and risk management. We've spoken about risk management a little bit in previous videos, but you want to use things like a stop loss if you're going to be trading actual stocks, or if you're going to be trading futures and even options. Make sure you have a stop loss. And if you're not going to be doing that, make sure you're implementing a strategy, maybe like a straddle, if you expect there to be some volatility. That way you won't lose money. Okay. Now, over trading is something obviously that I've done before. And actually, I just did that this past Friday. Had I not done one extra trade, I would have been well into the money. But that there was a factor of greed that kicked in that caused me to be down like $3 on a day, when at one point I was up more than $50. Okay. So just using that as an example. So again, executing too many trades in a short period, often driven by FOMO, okay, or greed. So it also increases transaction costs and reduces focus, leading to poor decisions. Okay, so that's something that I've done before too. Now, what you'll tend to see is for option traders, for example, those fees would definitely add up. And that's one of the reasons why on Friday I actually was down on my trades, because of the fees that were tacked on to the options trading. Okay. And so you want to make sure you pay close attention to that, not getting into too many options, and paying attention to what those calls are going to be associated. Okay. So let's go. All right, sorry about that. That was my wife calling me, but yeah. So you want to stick to your trading plan and avoid trading just for the sake of it. So yeah, you'll have certain situations where options, for example, and for those of you that don't know, options that have time decay. So meaning if you buy it at a specific time of the day, especially when you're talking about options that expire same day, if the stock actually doesn't do anything and you're just trading just for the heck of it. There's no movement virtually happening, and you see that in the charts. You're risking some money on the table. Instead of that, you would possibly want to do something like an iron condor if there's virtually no news that's going to be coming out. So again, stick to your trading plan. Don't overtrade because it will bite you in the butt. All right, so ignoring risk management, very important. So failing to set up stop loss orders or risking too much capital on a single trade, especially when it comes to option options that have quick time decay. And this is why I always say this when I start you guys out, it's going to be trading stocks. So you're going to be trading equities that do not decay in value. The only thing you have to really worry about is the direction of the stock, not necessarily a time decay involved. Okay. Now, ignoring risk management can lead to catastrophic losses, wiping out your trading account. Very, very important. So use stop loss orders and never risk more than 1 to 2% of your capital on any one trade. Okay. So for example, if you've got $100, right, you can use $10 in order to execute whatever option you want to exercise, but you would have like a $1 to $2 stop loss, meaning that hey, I'm only willing to lose $1 to $2 out of my $100 per trade. Okay, and that's how you would set something like that up, which we'll go into. Okay, now chasing losses, right? You hear a bunch of terms of this. Revenge trading is one of them. You want to avoid doing that. So the same setup that you use to get you into that position can happen over and over again. So you want to be strategic, take your time, and do small trades that'll add up to getting you back to where you once were. And so chasing losses, which is trying to recover from a losing trade by taking additional riskier trades. And this is where your emotions have to be in check. Okay. So this can lead to bigger losses and a downward spiral of poor decisions. Been there, done that. And so accept losses as part of trading. It's going to happen. Like I told you, I just had a small loss on Friday, and that's what we want to do. If we're going to have a loss, you want them to be very small. That way you can live to trade another day. Okay. Now you want to also avoid revenge trading and take breaks if needed. So if you need to take a day or two off, a week, a month, whatever it is, use that time to mentally recoup, get yourself back together, and then get back into the game. This isn't going anywhere. Okay. Now, failing to keep emotions in check. We kind of briefly talked about that. So allowing emotions like fear, greed, and hope to influence decisions. Emotional trading often leads to impulsive actions and losses. Develop a disciplined mindset and follow your trading plan strictly. All of these bullet points are very, very important. Okay. I mean, I know it's easy for me to talk about the emotional aspect of it, but until you've actually gone through it, it may not be something that you understand. So keep your emotions in check. That's going to, uh, keep you in the game for longer. And just don't be greedy. Just slowly make small profits at a time. Everything will be worked out. Do not be greedy and keep your emotions in check. Okay. Now, next is going to be ignoring market conditions, which we kind of talked about. So, trading without considering broader market trends, news, and economic data. So, for example, your mind is like, hey, I think the market's going to go up. I don't care. I'm going to buy a call. And basically, a call is an option that says you believe the market's going to go up. And so, meanwhile, you're not looking at the charts. You don't know what's going on in the news. And then you don't know what economic data is coming out. Guess what? You could potentially lose a lot of your money because you're going into this thing willy nilly and you're not paying attention to what's going on, you're ignoring the market conditions. Now, ignoring these conditions can also lead to trades that go against the overall trend, increasing losses. Okay, we just spoke about that. So stay informed about market news and adjust strategies according to conditions. Very important. If you see the momentum is going up, there's no reason to play it down unless you're looking at levels and you have some sort of insight letting you know the market could be coming down. So be very careful about that. Okay. Now using excessive leverage. Ooh, this is where that greed comes in, right? So borrowing more money than you can afford to loss to increase potential profits. While leverage can amplify gains, it also magnifies losses. Very important. Use leverage cautiously and understand the risks involved. Now, this is probably one of the most important slides in this particular lesson here. So, a lot of different trades that you will find yourself in that are more advanced, like credit spreads, debit spreads, um, you know, you're going to have a margin account to do um, these types of trades. And I've seen a lot of people sell puts, for example. So they'll sell a put on something like a Tesla, basically stating that, you know, I want to buy Tesla if it falls to $200. Tesla currently is at $250. And when you sell a put, let's say that Tesla drops all the way down to, I don't know, $125. Now, because you are, and I know a lot of you may not understand what I'm talking about, but because you use margin to double down on getting more Tesla, now you've gotten yourself in a hole. And let's say you by expiration you get in at 125. Now Tesla goes down even further to $75. Now there are ways you can make money as the stock is going down, like buying puts or selling covered calls. But a lot of times, if a stock that is volatile like Tesla comes down tremendously, you can really get yourself in a hole, because guess what? You still have to pay the interest on the money that you borrowed. And if that stock does not come back up within a given period of time, that's going to make you lose even more money. So the further it drops, in addition to the leverage that you have and the money that you're borrowing against your margin, is going to put you deeper in the hole. So, for example, if I have $1,000, right, and my margin account is worth $2,000. Now, Tesla drops more than half. Now I owe the brokerage, let's say $1,500, versus me actually losing, let's say, I don't know, $800. So now your losses are going to be even more. And now you owe the brokerage company even more money because you decided to borrow money. And meanwhile, you're still paying on that interest. Okay. Be very careful. And you'll find yourself having to put more money into your account because you owe money. So be careful. Okay. So, yes, they can amplify your gains when you're using leverage, but it also can magnify your losses. Even if you use a leverage ETF, for example, you use a leverage ETF, let's say of NVIDIA. So they have leverage ETFs that are two times the percentage movement of a stock like NVIDIA. So, for example, if NVIDIA goes up 10% today and you get in on that two times ETF, now your capital goes up 20%, if that makes sense. If it goes down 10%, now your capital goes down 20%. So there's you know, different ways you can use leverage, and I would stay away from them until you know exactly what you're doing. Okay. Now, the next one is neglecting to review trades. So failing to review and analyze past trades to learn from mistakes and successes. So yeah, if you find out that you know what, I'm good at trading stocks, but I'm not good at trading options, then you need to go and look at that and be fine with what works for you and not be so concerned with being greedy using that leverage of options. Okay. So whatever works for you, you stick to that. Okay. And when you look at the history, it's going to show what you're good at. Don't ignore it. Okay. Now, without review, you'll likely repeat mistakes and miss opportunities to improve. Okay. And a lot of times, some people are so, what's the word I'm looking for? Stubborn, even when they know what the mistakes are that they keep repeating over and over again. There's something about them mentally that just keeps driving them to do the same thing. Don't waste your time doing that. Once you learn from your mistakes, just please move on. Okay. Now keep a trading journal and regularly review your trades to refine strategies. Okay. Now, if you don't have a journal, the one reason I like WeBull is because when you look at your P&L, it'll show you exactly how much money you made or how much money you lost in a given day. So they have a calendar. So if you go to your P&L, and we'll talk about that some other time, you'll be able to see your own personalized journey of what you've done. Okay. Now, overconfidence. So becoming too confident after a few successful trades leading to complacency. Overconfidence can cause you to ignore risks and take unnecessary risks. Stay humble and disciplined, always sticking to your trading plan. That's very important. So, been there, done that, but I'll tell you guys what my problem is. Okay. My problem is not being overconfident, even though I am. My problem is I'll get bored, right? So for example, I've had like 12 trading days in a row where I didn't lose. And then I tried something different. And then I lost that couple bucks the other day that I talked about because I didn't stick to my trading plan that I usually do. And I went outside of my norms that bring me a daily profit. And so sometimes you're running to things like that you'll throw yourself off because you're not disciplined. And I still have those. I still have those days where I'll just get bored and I just try something different, and then I end up losing. So stick to your plans. Don't be overconfident. And yes, for a person like me, if I have a loss, I know that I can get it back, and that's not necessarily always a good thing either, which kind of coincides with this overconfidence. But sometimes when you have a loss, it can take you months to recover those losses if you don't have a tight stop loss or if you lose way more than you should have. Okay. So now let's go ahead and conclude. Day trading can be profitable but risky, especially for beginners. Avoid common mistakes to improve your chances of success and protect your capital. Protect your capital, protect your capital. Discipline, risk management, and continuous learning are key. That's it, guys. You have to stay disciplined. You have to continue to be willing to learn. And once you learn the things that you need to do, just stick to them. Now, yeah, every now and then you may slip and try something different. But if you're gonna do something different, just make sure it's gonna be in your best interest overall, and it won't put you in a position where you're losing too much money. Okay. So I hope you guys enjoyed this video. Hopefully you guys, took some notes. If not, keep replaying this video until you've gotten all of this knowledge. Okay. So I appreciate you guys. Please hit that thumbs up so we can continue to grow the channel. I appreciate you guys, and I am out. Peace.